Welcome back everyone to Truevo Talks. This is episode number 3. Now, the idea for this episode came when I was watching the Tinder Swindler nearly 2 weeks ago now. I had lots of questions about how this whole Tinder Swindler card fraud kind of related to card acquirers, payment processors, issuers, you name it. I wanted to understand that in a little bit more detail, and I think I could bring some great value to you with these questions. So I asked Barbara Zamponi, who is our Chief Risk Officer, and Alex Nogast, who is our Vice President of Business Development, to join me on a podcast to answer some of those questions. Now, let's get into it. Run that intro music. So both of you, thank you for joining. I wanted to have a little bit of a chat around the interesting Netflix series that I watched a week, I think it was ago, which is around the Tinder Swindler. I'm assuming both of you have watched it and you're familiar with what we're going on about. I wanted to understand a little bit more about, from your point of view, what your thoughts are on the show. From specifically yours, Barbara, from considering your role at Truevo, and equally yours, Alex. I wanted to understand and have a conversation with you around the whole show itself, and diving into a little bit more about the card fraud, understanding from a merchant's point of view how it could potentially affect them, but equally from a cardholder standpoint. But first of all, just to you, Barbara, what's your thoughts on the show? Let's start with that. How did you think? What were your immediate thoughts when it came out and you watched it?
It was impressive. I mean, we know fraud exists, but the advanced technology, the fact that we changed our living habits with the way we pay our bills, the way we also find love have changed, no? So this opened completely a new dimension to the scam. So the Tinder Swindler per se did not just steal data from his victims or use their card details to pay for his expensive lifestyle, but he went to the extent of building a relationship of trust, and he abused the victim's goodwill. So as we have seen, it was a very elaborated scam, and he had so many moving pieces. The guy basically created an illusion that all of us could believe, and all of us in life would help a friend in need or a loved one in danger. And that was the mastermind behind the scam. The Tinder Swindler became the loved one that all of a sudden needed financial help. And the victims were willingly providing their card details or their passcode. There was no coercion. And the victims knew he was impersonating them during the transaction, and they allow it. So it was a very well elaborated scam.
Yeah, and I think we'll dive into that a little bit more in a moment, and to understand from the victim's point of view what happened, the whole social engineering piece, and equally how he articulated, like you say, the whole illusion, and just so that we can understand it. Alex, what's kind of your thoughts on it, and what were your immediate thoughts after watching it?
Yeah, a bit of a mixed bag. I mean, in some respects, weirdly, almost a level of admiration in terms of how somebody can go into so much detail, use so much skill to put on such a facade and a persona. But then, obviously, on the emotional side of things, your heart absolutely goes out to the poor people that were his victims, because they're just normal, innocent, warm-hearted people that were doing things all the best intentions and for the right reasons, but unfortunately fell victim of a very cruel and I guess kind of very wicked man. Just really insightful into how I guess you can use tools at your disposal, whether it be social media, emotions, personal interactions, I guess endorsements from other people, to create something that is completely fake, but to the outside world seems like absolute reality.
Yeah, agreed. And I think the burning question I had at the end when I was sat on the sofa and I looked at my other half and I said, did the victims ever get their money back? What happened next? That was kind of my next thought. And just to you, Barbara, based on the fact that they voluntarily gave their card details to someone, What were the repercussions of that, and did they ever get their money back? I think for the context of the listener, it'd be really good for us to understand that.
So unfortunately, in these situations where the transaction is authorized and fully authenticated, the only option for the cardholder is to reach out to the merchant and request a refund, but there is no obligation from the merchant side to provide a refund, because the service most likely was delivered, and the merchandise also was delivered. So the transaction, the only option for the cardholder is to report the transaction as fraudulent, so that the payment gateway, the acquirers, the schemes, and also the authorities can investigate the fraudulent activity further, and maybe the bad guy can be prosecuted elsewhere.
Okay, yeah, and I think that gives a bit further context. And have you got anything to add to that, Alex? Or is there anything that you wanted to just on the piece of the victims and how their card was they voluntarily gave their card details away?
Yeah. In terms of, I guess, them and getting money back, if you look at it, from a technical standpoint, there was no fraud. Okay, so fraud happens when card details are used against somebody's will, without their knowledge, and a transaction has been processed, in their name. Unfortunately, in this circumstance, the victims here were implicit in the processing of their transactions. They'd voluntarily given their card details, used their cards and loans, whatever it would be, to help fund that lifestyle. So as much as they're a victim in that they were kind of swindled and used it in the wrong way, unfortunately, in terms of actually the physical processing of a transaction, they were implicit. They voluntarily did it, and there was no card details stolen. So technically, there's no fraud, and therefore, I guess legally and technically, there's no reason for them to request funds back, or for anyone to give those funds back.
Yeah, and I think we were having a conversation about this recently around the actual type of fraud that this is closest to, which in this case would be friendly fraud. We're aware of the three frauds of the friendly fraud, accidental fraud, and criminal fraud. But if you could just go with both of you, Barbara or Alex, whoever choose. I mean, I'll go to Alex first. But what's your thoughts on that whole friendly fraud piece, and equally, how does it tie so close to them, and how are they so closely linked?
Yeah, so to your point, to break it down, you've got the three types of fraud, right? So starting with criminal fraud, pretty straightforward. That is, somebody has stolen my card physically, or has somehow managed to obtain my card details through criminal enterprise, and they've gone on a spending spree and used my card details to make a lot of purchases. That is pretty straightforward criminal fraud, and that's where transactions have been made in my name using my card against my knowledge and will. The next two are what you call friendly fraud or accidental fraud. So friendly fraud is when, for example, I look to make a transaction, I process that transaction, and actually what I then do is I then maybe abuse, I guess, kind of the refund policy or the terms and conditions of a supplier's goods and services to actually get my money back. So an example being, I order, a new pair of trainers from Nike. Nike deliver them to my house. I receive those goods, but then what I do is I say, well, I've never received those goods, so therefore, I want a refund, or I create a chargeback in order to challenge that transaction, and that is what we call friendly fraud. The other option is accidental fraud, where actually I might see a transaction come through on my bank statement. I think, hold on, I don't recognise that. Actually, I'm going to challenge that. When in actual fact, it's just that I've misunderstood which transaction that is and where I've maybe made that purchase. And it was done, with my will, with the right intention, but I've just not recognised it and therefore challenged that. That's what we call accidental fraud.
Yeah, and I think I'll come to you in a second, Barbara, about the same topic. But I think one of the areas I covered recently with the merchant was around the actual descriptor that the merchant's using on a customer's bank statement, or when money and funds are pulled from that customer's card or bank account. The descriptor sometimes doesn't match the actual trading name or the business name that they're therefore buying that product or service from. And I think sometimes that's where the confusion is, and that's one of the reasons I've managed to tackle friendly fraud in the past, is just looking solely at the descriptor. And I'm sure, Barbara, have you got any comments on that? And the whole chargeback piece, I mean, your knowledge it's through the roof.
So, what is chargeback? Chargeback is a reversal of a transaction, and the whole purpose of the chargeback process is to provide consumer protection when fraudulent activity is committed either by merchants or by individuals. Reason code for fraud can also be outside the fraud spectrum, and as you said, for example, sometimes it's just a matter of misunderstanding. If the descriptor of a merchant is not clear enough, or the cardholder is abusing sometimes the chargeback process, then there could be instances where the merchant can possibly defend their case and provide supporting evidence that they delivered the service the cardholder paid for, or the merchandise they paid for.
Yeah, no, thanks for alluding to it. And I think that it leads really well on to kind of my next question for you both, which is, chargebacks cost money for a merchant. As Truevo and any acquirer does, there is a charge to disputing and tackling chargebacks. So the more we can reduce that, the better, obviously. But what is it that go to you, Alex, as Barbara's just alluded to the chargeback issue. What are a couple of pieces of what are the payment and card industry doing to, reduce that fraud and try and minimize it? Because we can never cut it out completely, I'm sure, but to minimize it and to, reassure the merchants that are listening, and equally the card holders, what is it that the payments and cards industry are currently doing but equally plan to do to tackle fraud challenges?
So the biggest, the biggest piece of work that the industry has put together to tackle that is around SCA, which is strong customer authentication, and that's on the back of the PSD2. And essentially that's focused predominantly on e-commerce transactions, reason being because over the last, 10 to 15 years, that's where the majority of fraudulent transactions with regards to card processing has come in place. That's been, if you look at face-to-face, that's been eradicated with the induction of chip and pin, which gives you that extra layer of security in terms of authenticating the card holder. But when it came to e-commerce transactions, what we were finding was before it was what we call a 2D transaction, or everything was 2D secure. So all I had to do to go onto a website was enter essentially, card details, long card number, expiry date, and a 3-digit security code on the back, and I could make a transaction. If I stole somebody's purse or wallet, or if I managed to kind of mass steal a load of card details from card holders, I could use those and without any essential security checks, make a load of online transactions. SCA is then moving away from that, and it's going to make it mandatory for all retailers who sell in an e-commerce space online to have to push all of those transactions on their website through a two-factor authentication process. So when a card holder goes to the checkout and they enter their card details, they're also going to have to go through an authentication process of one of three things. They're going to either have to show something they know, something they are, or something they have. So that can be a one-time passcode. It can be facial or fingerprint recognition through a phone, or it can be registering the IP against a recognised device that person used and purchased off, whether it be mobile phone, tablet, desktop, whatever. So essentially, there's extra layers of security to ensure that actually the person processing or creating this transaction online is actually the card holder, and that's going to massively reduce fraud, because essentially people who are stealing card details might be able to have the card details, but they're not going to be able to fake essentially that authentication process, and therefore even if they try and create a transaction, if they can't authenticate it, it doesn't go through.
So I suppose that leads a little bit onto Apple Pay, Google Pay. Now, I'm familiar with how, it's slightly off topic, but I want to understand how Apple Pay and Google Pay can really, I suppose, kind of make even more of a seamless transaction from a consumer standpoint. I mean, how does Apple Pay and Google Pay compare to the 3DS via a biometrically scanned or verified transaction?
It's if you just go through a normal 3DS process for that two-factor authentication, essentially you're going to be redirected to then authenticate that transaction. So what that does is it causes an extra step in the checkout process and extra friction. So essentially, you know, when you just want to go on and purchase something, especially if it's a kind of low value, quick transaction, you just want to do it as quickly as possible without, you know, all this extra additional stuff that you have to go through. So where Apple and Google Pay comes in, and it's really useful, is twofold. Firstly, because it's, you know, usually done on a mobile device, which that person's registered against, and also it's using facial recognition or fingerprint recognition to confirm that transaction. You basically already hit the two-factor authentication, you know, just by using Apple or Google Pay as an alternative payment method to just a traditional card payment. So essentially, you're doing the security check and completing the transaction all in one. So it kind of gives the customer a seamless transaction of going through that two-factor authentication and completing a transaction in one, but also by merchants allowing it through their payment gateway on their website, it also means you're not having to push customers through an additional process at checkout. They can just, you know, go through security checks, eradicates fraud, and pushes them through that checkout process really seamlessly. So essentially there's benefits on both sides. There's the security for the merchant, actually they're getting all the card details that they can push on to that person's card issuer to authenticate that transaction. But also from the card holder themselves, the consumer, they're being pushed through that without even really knowing it, and actually just getting a seamless buying process online.
Yeah, and I think the amount I use Apple Pay, it's almost dangerous. It's almost like I'm spending Apple's money and not mine. And I think it's quite dangerous for face-to-face and online. But Alex has articulated that really, really well, Barbara. But have you got anything else to add when it comes to SCA or from your angle? From your role, how does that, you know, expand on that a little bit for me?
Yes, what I wanted to add on Alex's explanation is that once the customer has completed the SCA step, the strong customer authentication step, and have gone through the two-step authentication for every online purchase, then the merchant can avoid liability in the future if this transaction is then flagged as fraudulent. And this is called, in card scheme jargon, liability shift. So it's a way also to protect our merchants.
Great, and I think that's a really, really valid point. I think, again, we seem to be doing this a lot, but it leads really well onto the next question, which is, I want to understand, and I want to provide a little bit of context to the merchants and equally the card holders, but moving straight to Alex, talk me through a little bit of the process that a merchant has to go through when they look for a payment provider. You know, what kind of steps do they have to go through? What kind of steps do us as Truevo, the acquirer, or equally the gateway provider, what steps do we take them through, and what due diligence checks do we run them through to make sure that they are exactly who they say they are?
So look, I mean, I guess in a general sense, there's what you call roughly kind of 3 pillars of defense in that, in terms of, you know, making sure that actually when we look to work with a merchant, that they are a good, secure, reputable business that, you know, we're not likely to experience any fraud through. That first pillar of defense is, you know, the commercial, the sales people, that, you know, kind of having that first interaction with the customer. Yeah, and you're always going to do your approximate due diligence checks in terms of looking at the website, looking at company's house, how long have they been trading for, what other businesses potentially do shareholders or directors of that business have interests in, how long has the website been up and running, actually how good does the website look, you know, what sort of platform is it working off, does it look professionally done, have they pulled in, for example, a web developer to build that, at which point actually they've looked to have spent some money for a good reason, what's the look and feel of the website, how open to giving us information are the people that we're speaking to, at the merchant, and do you just get a good feel about actually are they a reputable business or not? That's kind of first pillar of defense, right? If there's any kind of red flags in any of those things in your first check as a salesperson at Truevo or any payment provider, that should make you think, hold on, is there something wrong here? Actually, do we want to work with these people? Or before we go to the next step, do I need to maybe delve a little further? So look, first pillar of defense covered off. If we think, yes, they're really good, actually we think we do want to work with them, we'll then take them through an onboarding process. At that stage, the onboarding, the underwriting, AML, KYC teams internally, they'll do all their own due diligence in terms of the business, where they'll go into further checks, use more in-depth systems and platforms to get further information and do further checks on a business, the owners, shareholders, those sorts of people, to make sure that actually are these registered in a sanctioned country? Have we had blacklisting against any of these people? Are there criminal records against any of these people? All those sorts of things, again, which should throw up any kind of red flags. Even things like looking at the processing history. Again, if they're a startup business and they can't prove that they've been trading properly, might raise some red flags. If it's a business that's been trading for 3 years and they've got great trading history, the likelihood is they're probably a pretty solid business, right? So again, once we've gone through those checks, we can say, okay, good, happy with these. We think they've ticked all the boxes. We're happy to work with these people. Third pillar, I guess, is then ongoing monitoring of that merchant. So what I mean by that is, say, for example, it is a towel reseller, right? Really random example, right? But, they sell luxury Egyptian towels, and you'd expect an average transaction when somebody's going to buy a set of towels to be anywhere from £50 to £100. Okay, that gives us a profile of what that business looks like and the sort of transactions that we should be seeing through that merchant. If all of a sudden, for example, we're seeing a number of transactions going through for £5,000, £10,000, £15,000 on our ongoing monitoring, that will flag up, because we know that, hold on, that's wildly different to what we'd expect to see through this customer. Why is that? Because let's be honest, if you're spending £15,000 on towels, that's a lot of towels, right?
It's a lot of money.
If you're buying that many towels, typically it's not going to be for home. It's going to be for a business. A business wouldn't buy them through this sort of thing. It'd be a trade transaction, not through a consumer e-commerce business. So then, the ongoing monitoring teams would be looking into those and checking, well, hold on, where are those transactions coming from? Who's making them? Does that look right? Does this raise up suspicion of potentially, cleaning money, through these transactions, through this website? And that's then the ongoing kind of pillar of defense, so that once we've got people in, even if they've looked great up until we've got them on board, if they then try and use the services that we're providing them to launder money or clean money through our services, that will flag up, and then we can take the necessary action. So a bit of a long answer, but hopefully gives you a bit of an overview of kind of from start to ongoing and finish with a merchant, how we'd try and eradicate that.
Yeah, and I think that was a really good overview, to be honest. But I think, Barbara, have you got anything to add to that? Because you might have some nitty-gritty areas within that whole overview that you might be able to expand on.
Oh, Alex covered it very well. He's an expert on that. But yeah, true. I mean, our due diligence process is very rigorous. We'll check, we'll go through a lot of PEP and sanction screening, anti-money laundering check. We'll check who ultimately is behind the business, who put the money together, if there is any license required, if the business model makes sense. And only after the merchant pass all these checks successfully, they can start process transaction with us. And also, Truevo, we take very seriously our ongoing monitoring obligation, and in a way, we overlap with what our merchant should be doing from a fraud prevention and detection point of view, because on a daily basis, we review transactions, we review online blogs, we review cardholder activities, suspicious patterns, and all our merchant transactions go through another pair of eye screening. And if something suspicious is detected, or if there is something that really doesn't add up, then we contact the merchant, the issuing bank, we can contact the schemes, we suspend the payment. Basically, we take all the necessary action to stop fraud and avoid the merchant losing money. So whenever you come across a merchant that has the secure payment powered by Truevo, you can trust that the merchant has gone through this rigorous check at underwriting and is being monitored on a daily basis by our team of experts.
No, I think, again, very, very well covered. And I think from a point of view, we've pretty much covered everything when it comes to this topic. And there are far more areas that we could dive so deep into when it comes to these extra areas in regards to processing card payments, which I think long term, we're definitely going to have to get you both back on, and equally some other areas of our business to really dive deeper into those areas, because I think there's some areas in there that can be really valuable for the listener, although they're not necessarily exposed to it on a daily basis. Equally, when they're looking at providing or finding a new payment provider, but I think it's great for the merchants to know either way. I'm going to wrap up with some questions. Now, you were provided the questions that I've already asked, and you've had some context as to what they are, and you've been able to plan them. However, I've got a couple of questions that I wanted to run past you, some quick fire questions. I'll start with Alex, get his answer first, then I'll come to Barbara. But okay, number one, what is your favourite book?
The Da Vinci Code by Dan Brown.
The Da Vinci Code. Very good choice. Barbara, what's your favourite book?
The Little Prince.
The what, sorry?
The Little Prince.
The Little Prince. There you go. Yeah. There you go. Back to Alex. What's your favourite song? I know your type of music, so...
Do you know what? This is going to... I can't believe I'm going to admit this, but I'm going out there with it. Wild Wild West by Will Smith featuring Cisco. What a tune. That says a lot about me, which I probably shouldn't share, but never mind.
Love that. Barbara, what's your favourite song?
So, my favourite artist is Nick Cave, so I cannot really pick a song. I mean, I love them all. I love particularly the Boatman. No, I love them all, yeah.
You love them all. We'll take that. I'll let you have a few. We'll take all of them.
I cannot pick one.
Alex, favourite movie?
Gladiator.
The what, mate?
Gladiator with Russell Crowe.
Gladiator.
What a film.
What a film. Yeah, great film. Great film. Barbara, favourite movie?
Pulp Fiction.
Pulp Fiction. Do you know what? My other half's been begging me to watch that. That's a great film, isn't it? That is a great film. Now, number 4, Alex, road trip or having visitors over?
True.
Road trip. 100%. Barbara.
I'm antisocial, but I just love getting out and travelling. So I thought I'd add that in because it makes me sound really antisocial, like I never want to see people.
I think with COVID being here, I think it wants to get us all out of the house, I think. Indeed. Barbara.
Road trip also.
Road trip, yeah, I think we can all agree on that one. We could definitely all agree on that. And then finally, Alex, what do you love the most about working at Truevo?
You know what? I think the buzz and the excitement about the journey that we're on. Mm-hmm. It's a business that's done really good things up to date, but I think what's held in the future for us is just unbelievable, really, really exciting. And I think to be part of something where you're on that journey, the mindset across the whole business is to really be on that journey, give it their all, and want to be part of something that leaves a legacy and actually, makes a footprint and gives everyone here, I guess, the autonomy and the ability to be part of that. That's really exciting. It's not a come in, do the bare minimum 9 to 5 job. It's come in and, you really get to, play a part of something quite exciting. And it's something that, even if you leave here and things change in the future, whatever, you'd be able to look back on your time here and think, do you know what, that was a really good point in my career and I was really part of something special.
Yeah, I couldn't agree more with that answer. I think I'm in the same boat. I really am. Barbara, what's your favourite thing? What do you love the most about Truevo?
Yeah, the sense of empowerment and be part of something that is growing and is growing, in a way that is very rewarding. We're all part of something big. We take part of this journey, as Alex said. We can contribute, shape our future and the future of our organization. And I find this very, very rewarding personally. Yeah,
agreed. I think we all found some common ground on those questions, so I'm pleased about that. No, but I really appreciate you both taking the time to join me today and answer some of the questions that I had. We may have you back soon. I'd like to have you back. I think that was a really informative podcast, and I think we definitely want you back in the future to cover off some more topics, maybe some more in-depth ones, or maybe some more overview topics, whichever ones come up. We might have another Netflix series we might have to cover, but we'll see. So I really appreciate both the time, so thank you for joining.
Thanks for having us.
Thanks.
Now that you've heard from the experts, we'd love to hear from you, whatever platform you're listening on. And if you've got any questions about what was asked, what was answered today, or you want to cover the topics in more detail, head over to our website, truevo.com, and we look forward to seeing you in the next episode.